Another verse I think that says the same thing in a different way is, I believe it's Psalm 37:4, is delight in the Lord and he will give you the desires of your heart. We have to delight in the Lord first. And it's not, in God, Jesus must be seated on the throne of our heart in order for those desires to be righteous and in agreement with God's word, his statutes, his commands, his ordinances. All right, where are we moving on here?
Yeah, Frank, tell me some reasons why income versus looking at retirement, like, okay, I'm going into retirement and I'm going to need $3 million in order to retire. I'm going to need 5 million or 1 million. I'm going to need 500,000, whatever the number is in your mind. What is a difference between having that mindset, thinking about your future, versus investing for income for life? What is the difference to you in retirement?
The difference for income for life.
For lifestyle, for like a person,
Yeah, I think what you're saying is that will I have the ability to generate, to cover my monthly expenses in the way I want to live? And so that when we're talking about retirement, we're talking about I stop working, so I have to have income, or this income that was coming in from my labor or from my work or from another word we skip is vocation. A vocation, a calling from God to be in a place of work. And so when I retire, where is that I have monthly bills that have to be paid. Right. So where is that stream of income going to come from? Right.
So that is one of the big pivotal parts. And that is why it's so important to, I think, invest for income. Income plan, it goes income plan first, right? We do extensive budget. It's one of the very first things we do.
Details, get in the devil's in the details. Root them out.
What payments are you still going to be making? What checks are you still going to be writing when you retire? What income is going to be coming in from pensions, Social Security, and any required minimum distributions or any side jobs, rental income. But the main important part of this is that in order to create a lifetime income strategy, you really need to determine how much income are you lacking once you quit your job and all of these other things come in, whatever they may be. Perhaps it's only Social Security. Once that happens, no W-2 or no paycheck is coming, and now you get Social Security. What will you be lacking in income in order to meet your monthly expenses?
Right. And putting all those numbers together with inflation and drawdowns and RMDs together, it's a lot of calculations.
It's a lot of calculating.
And we have software, and proprietary software.
Yes.
Now, as you have your thought.
Yes.
So call in to the live program, to the Mindie Molina Show, with any questions or stories you'd like to share about retirement planning, any financial questions. The number here at the station to reach Mindie or I is 772-221-1100. 772-221-1100. You can also find Mindie Molina Investments and Insurance at mindiemolina.com, and it's MINDIEMOLINA, mindiemolina.com.
And you can also go on YouTube and my channel, The Mindie Molina Show, and you can watch a lot of videos to learn a lot of different things, concepts about retirement, around retirement.
We have an office here in Stewart, and all our planning and consultations are absolutely cost-free.
So going back to what I was saying, which was, now we've identified what is your deficit in income monthly. Now we need to back into that equation and say, how much money would it take to set aside in a separate investment to fund that income, that difference? How much money would it take to create you a lifetime pension that fits perfectly into what you need and not anymore?
Right.
And then also you still have access to that cash value.
It's called backwards planning.
Yeah. Remember, that's why I call it investing to retire. Let's look at the retirement, and then let's back into the equation, and let's build your strategies around that. And then we know we need this portion of money invested for lifetime income. And then the rest of it, we want invested for growth, for our other assets, like our children, our grandchildren, our spouse. We want it to grow in case there's a large expense that we weren't anticipating. What if we need long-term care? How are we going to fund that? We add that into the equation. How are all the taxes going to shake out? That's why these two concepts, I think, are so important for anyone who is investing and is retired or plans to retire one day.
Not to mention
Investing to retire and income for life.
investing to retire, investing for life. But the approaches that Mindie and I are talking about are not exclusive to personal. We also sit with companies or with small businesses to create 401ks, solo 401ks, or 401ks for businesses that are trying to bring down their tax burden,
Right.
and create a stream of income, a potential retirement stream of
Business
income for their employees.
Owners probably,
And it's low. It's not as nearly as expensive as we thought as we've been looking into this. Has it? Has it been?
no,
Yeah.
no, none of
very
the things
affordable
that we do, everything that we
for setting up a
do,
401k for a business.
we are always looking because we're fiduciaries. Look, we don't work for a specific company.
Fiduciary, that's a big word, Mindy. What's a fiduciary mean to you?
A fiduciary to me is somebody who has your back financially, okay? And not an institution's back. I don't work for an institution. I work for my clients. I'm also duly licensed, which means that I can offer you, teach you, introduce you to a lot of different concepts, not just the stock market. Can absolutely help you with that. But you know what? I would be doing you a disservice if I didn't understand how Social Security works, Medicare works, long-term care insurance works, life insurance strategies, annuity strategies.
Overall.
What do you think pensions are? They're annuities. So you're not going to be licensed to understand how an annuity works. We're talking about retirement planning. It's crucial. So don't come to me and say you're a fiduciary if you're not duly licensed and independent.
You have an opinion about this.
There
I
you
think.
go.
Yes.
So that's what it means to me. You asked the question. Don't go provoking me. Okay. What else was I saying before I said that? I lost my train of thought.
Investing for retirement.
Investing for retirement. Business owners. We were talking about business owners, and a small business, a growing business, a firm has so much need for financial planning that overlaps with business and personal, myself included. Business and personal overlap. And there's even so many people that don't own a business that probably should. We just had this discussion, perhaps something small where so you can take the tax strategies, the tax benefits of it, and having those strategies in place can really help you save from taxes now. So let's say you have saved up $1 million and you're at the 30% tax bracket, or over the years you've earned up to $1 million, spreading that over a decade or so.
Okay.
Now, but you've been in the 30% tax bracket. That's $300,000 that just went to Uncle Sam that was not going into your investments over time.
Well, I'm
just showing you simple math. I know it's not exact, but I'm conceptual, okay? So this concept, that money is going somewhere, but just imagine if you weren't paying that out in taxes,
we want to pay
compounding.
the least amount that we can pay.
Well, that's how compounding works. That's why IRAs are so popular, because the money is staying in your assets. You want your money to be making you the most money, not anyone else. And that's the whole point of being independent and being able to offer those types of services.
So
what were you going to say?
There are reasons why, a lot of people have been asking us lately that, why should I pay a financial advisor for their advice and their planning and their strategies when I can find the big house companies and do a lot of this on my own? And so, the downside risk downside protection, and is one of those reasons, right, that we like to employ with our clients. And then I just wanted to mention, you could think about that and how you would like to answer that. Well, why would I need to sit with a financial advisor? I could be doing this, and I'm sure there's plenty of listeners out there. Frank was the same way not too long ago, doing it all on his own. So and then I want to tie that into that there are big businesses that may be participating, like FRS, for instance, and other, of the big industrial folks that are here in South Florida that have 401ks that you can have actual financial advisor portfolios with active management in them and
Mhm.
still have your 401k that you have with your employer.
Yes.
So you see the
Active management versus
I hope
passive
I'm not
management.
swaying you down too much of a
No, no, no,
rabbit
no,
trail.
no. Nope. I followed you the whole time. So here's my comments. From the beginning, what you said about why would someone think that there was value in this, like versus them doing it themselves? Well, I will say I have seen both. And you never know until you sit with someone and or till somebody sits with me, sees my process, sees my ability to get everything organized and like I said, create this connection between investing and retirement and really developing that end goal and taking you all the way to the end of your life. So until you witness that, I think it's hard for someone who is adverse, like Frank was very adverse in his investment strategies. But until you see that overall, how long-term care planning, estate planning, taxes, and income planning all tie together. Now, I have had,
Active management.
and I have, well, before I go into that, I've had situations where, yes, families have come in or a couple comes in and they sit with me and we go through this whole process. And at the end of the day, we decide you could do this yourself. And to that I say, why wouldn't you? Why wouldn't you? And I'm fine with that. I don't take that personal. I think it's great. And I also feel like it gives them even more peace of mind because they go home and they say, okay, I'm doing a good job. I've got this. And then the question is, okay, Frank, you've got this, but what happens if something happens to you? Where does this leave Joe?
Right.
And for that, I have several files in my desk of same deal. I've got all the information. I know where you stand. I know what's happening. If anything ever happens to you, you continue doing what you're doing, but she knows that she can call me and I will help her.
That's right.
Now, most of the time, no, everyone is wowed and like, wow, I see it. I see me retired. I see this. This is going to happen. That's typically what happens.
We typically too, when we put it up on a big screen television and you could see all the numbers and how it works out, and that the clients are very pleased with the products that we present them.
It just closes so many
potential scenarios.
Yeah, it closes so many worry boxes. So, and then sometimes, it's like, all right, how are we going to make this happen? But
and it's never really either a one size fits all by no stretch of the imagination. It's not one.
That's where the expertise comes in and the experience.
Nike sneakers we're trying to put on this client. No, and many times there are multiple ways to satisfy the needs for retirement with a client. It's not just one.
No,
one
the process is one size fits all, but the outcome is not. The process is the same, but the outcomes are not. The scenarios are not. They're very, very customized. They're individualized right down to, what everything that applies to you.
This must be a very costly expense, though.
Even it doesn't cost anything. Huh? It costs me my time and you your time.
But we don't do it for nothing.
But if you will invest time, then I will invest my time. But there's no cost for planning. The planning that we do averages $2,400 to $3,000. If you are working with someone that charges for their planning, which at this point in my career, I don't ever intend to. Never say never, but that's.
So how would you describe how you get paid for the?
Frank, how do you describe how we get paid? I want to hear you tell the story. You hear me say it all the time.
Well, it's fee only fiduciary.
Yes.
And so, you do it. I'm learning there's multiple because we're duly licensed. So
what does fee only mean? Let's stick on the investment side. Don't talk about insurance yet. So for investments, if someone comes to us and says, here's, my portfolio, will you invest it? And they choose one of our models, work with one of our money managers, and we move their money to TD Ameritrade Institutional. And now we're managing that money. What would fee only mean?
Well, the fee only is assets under management. We don't get paid for any trades, no recommendations, no moving from.
We don't get paid commissions on mutual funds.
We don't get paid commissions on mutual funds. Assets under management. It's a
dollar amount. What is assets under management? What's that even mean?
So they move $1 million, and then 1.65 is a typical portfolio fee. That is a.
Do you know what the range is?
About 1.5 to 2.5.
Yes.
I believe. And
for generally speaking, for a fiduciary fee only advisor that doesn't get kickbacks, that doesn't do revenue sharing, that doesn't make commissions on all of your investments, 1.65, is that on the high end or the low end of that type of advisor?
It's on the low end.
Right.
And not to mention that 1.65 doesn't stay at Mindie Molina Investments and Insurance. That's not all for Mindie Molina Investments and
Right.
Insurance. That has to be divided.
With the custodian and the compliance back office,
yeah.
a registered investment advisory, which is Aegis Wealth Management. So very, very good. Now, let's talk about the insurance side. On the insurance side, what does a client pay?
There are no fees come from the client, no compensation at all is
Right.
paid for any of the products, any of the services, any of the recommendations we might make for insurance products,
Absolutely.
which include annuities.
So insurance products, just like when you get your homeowner's insurance, just like when you get a life insurance policy or your health insurance, your agent is paid by the insurance company.
Right.
So that doesn't come out of the client's pocket. If that is, they select or opt to use any type of insurance products. And what some of the things now, since you did segue into fees,
But
one of the
we're
things,
complete wholesalers too, not tied to any group or any particular insurer or house or anything like that as
No.
well, which is really
we are solely independent.
Completely
And it's
independent.
really important that you understand that, simply because we don't have allegiance to any.
So you have
companies.
your thoughts. Why give them the phone number to call in to the live radio program at
Sure.
772-221-1100. This is the live radio program. This is the Mindie Molina Show. You can call in with questions or stories or a comment about your financial planning questions or anything you might want to talk about today with Mindie or I. I am Frank. 772-221-1100.
Thank you, Frank. So in the way of fees, it's important that you understand the reason that fee only in regards to assets under management is really beneficial to a client or to the investor, to you, the listeners, is that if you lose money, your entire advisory firm who you've hired to manage your money, everybody involved also loses money.
That's right.
Our income decreases. So for example, in 2008, if your investment accounts had dropped 50%, so would have the income, the monthly income to every single person involved in our advisory service. Okay. So the reason that it's really important to understand that is because during that same time, an advisor could sell you a new mutual fund or change your investments around, do what's called churning, and actually generate more income in a time of loss. Right. So we can't participate in that because the license that we hold is an ethical law license, the Series 65. We don't sell investments. Okay. We provide advice, investment advice. So it's completely different. And it's so important for people to understand because if you don't know how the system works, how it works against you or how it works for you, you could be losing money you could be making to other people. And the key here, I've done everything in my power and I continue to fight for the right structure that is going to give you the absolute best outcome that's going to provide for you. Look, God will provide for me. I'm going to be fine. The money comes. If I'm going to show up every day and work this hard, it's going to be for good.
Right. And so again, I think just to segue into what you're talking about, and I've heard you explain this, so correct me if I'm wrong, but why, again, is this important to Mindie Molina Investments and Insurance is because we are taking the time to sit with our clients and investigate and find the needs, find the potential solutions. Mm-hmm. We're not the ones sitting at the computers, making trades on investments. That's why we use a specialty team who that's all they do.
Yes.
Invest. They don't sit with clients. The people who are investing our clients' money, our money, my money as well, because I'm invested in this model that we're talking about, and so is Mindie.
Is because why are we not sitting at the trading desk?
Right, because our time is spent to meet the needs of the clients and to get their portfolios in a position where the traders, if that's what's necessary, at a trading desk as a part of their portfolio is.
Yeah, the distractions. Okay. Yeah. I call this a DIY investor. And that's when you have an advisor who is meeting with clients, doing their own marketing. Maybe they're on a radio show. Maybe they're writing articles. They're doing their marketing.
Podcasts.
They're doing service calls when people call and have a change that needs to be done. They're doing all these things. Oh, and by the way, they're doing all the trades and watching the markets. You're doing everything. And there's no way you can be doing all of those things the best way possible, in my opinion. So, but the structure that I like is when you have analysts, when you have tech teams, when you have certified financial analysts who are sitting and specializing in their sector, right? So if they specialize in retail, like, should we be invested in JCPenney or Sears or Macy's? That's a sector. They specialize in that. They're not distracted by phone calls. They're not distracted by anything going on except for that job, that position.
Yeah.
So that's who I want managing my money.
SME is you familiar with that acronym? They're SME.
What is it?
Subject matter expert.
Oh, okay. Subject matter expert.
An SME, subject matter expert. That's those people sitting in front of those computers making those trades.
And that's who we pay. That's where part of your fee is going, is paying for that specialized, focused service. Those analysts who aren't distracted. Honestly, they rarely have the personality to really hold these planning conversations anyways.
Fielding phone calls.
Yeah, fielding service calls. So it's just important that everybody is doing their expert position. My expertise is connecting with people, understanding their needs and their goals and their objectives and the things that matter to them in life. Just like Frank said, true assets. Like, what are your real assets? Your kids, your lifestyle, your dreams, your vacations. When you look back on your life, like where I started out with the show talking about a funeral. So when my uncle passed away, we were at his funeral and I helped set everything up, and it was just a tragic death, so unexpected, and I was kind of facilitating the funeral planning, the event, and it was not fun. But you know what? Of all the things and the amazing accolades, and he was in the Air Force and his career and all the things that he did, that was not one of it was a focus of his life. Nobody talked about that.
Right.
Because you know what? Money doesn't matter. None of those things were as
important. With you to heaven.
No, it is here to design an amazing life for you. And that's what people talk about. That's what people cling to and remember and focus on, because that's actually what matters. So
I like the Philippians verse. I press on that I may lay hold. I press on that I might lay hold. And we do that with our faith. And we need to press on in our faith, that we may lay hold of Jesus as he's laid hold of us.
So one of the reasons that I focus again on retire or investing to retire is because I think it is really crucial to not invest wildly, but to invest with purpose, to invest with meaning, to invest with strategy, and to invest with a goal, an end goal in mind that is maximizing your time on this planet in your healthy, most amazing years, that is maximizing your ability to provide for your family for generations to come. It's maximizing the things that actually matter to you most. Maybe it is leaving money to your church. Maybe it's leaving money behind to a certain charity. Maybe it's funding these things today, increasing gifts. Whatever is important to you, that's an asset to us. And we talk about that in our process. Our process is designed around identifying, hey, this is what matters.
I mentioned that, as you said, invest for retirement, that being dual licensed, that we provide solutions that are guarantees, that doesn't have risk. Just investment doesn't necessarily mean risk.
Look, I prefer as an advisor, if as soon as I get to the point where I know for certain my guaranteed lifetime income is going to cross over with my lifelong income need, I'm probably going to start letting Frank or whoever my protege is talk on the radio, or I'm going to be at the beach. I'm going to be surfing. I'm going to be fishing. I'm going to be with my kids. I'm probably going to be doing amazing things. Why? Because that's what I'm investing in. I am investing for that future income that's going to carry me through the rest of my life. Not to say that I'm never going to build. Frank's going, what are you talking about? I'll never give up. I'm always going to be doing something, but I think it's important to know, and even in your 40s, even in your 30s, you need to be able to know, hey, this is when it could happen. I'm planning for it to happen this time if I have to work a little longer or carry on.
And if you plan early, if you start early enough, that means you should, if you strategize and put some good effort into your planning and taking time, that you can retire earlier. Because the longer you wait to put together the plan, how do you know?
Do you know that like I actually glow? Like I get so excited when someone comes to me and have ideas of planning of retiring early. Like it makes me happy. Like I can't wait to figure it out. Like like I want them to retire. And even if they don't, it depends. Like my work is so amazing. It doesn't really feel like work, does it? It's very fun.
I love it too.
I really love it. And it's fine. Like I don't consider it work, but I have had jobs and I meet with enough people that I see the struggle. I see the stress. I see the pain. I mean, we had a conversation today. I just don't know how much longer I can do this. It's just so stressful. What can I do? My heart bleeds for her. I want to figure it out today, how we can relieve her of the stress. If your job is stress, then I want you to retire as soon as possible.
Right.
Tomorrow, if we can make it happen.
Or so is a pretty, has a pretty
65,
big,
you mean?
Big, if you wait until then to figure out what my plan needs to be.
Yep.
Right, you've waited a long time.
Yeah, no, it's much better.
And that hill
because what is one of your most valuable assets? Time is one of the big ones.
Compound interest.
The sooner you start planning, the more time is going to work on your side. And it doesn't matter how much money you have, whether you have $100,000, $300,000, whether you have 10 million, 80 million, 300 million, the process is the same because guess what? Ultimately, your assets are just as valuable. Okay, Frank's wife, Jo, is just as much of a valued asset as a man with $1 billion values his wife.
Of course.
Yeah, these are valuable assets. No, you can't put a price tag. Like I said, when we leave this world, it's not money that we talk about. It are the other assets. You can't get time back. So this process is designed for you to maximize all things. So I just wanted to say that because I think it's important. Well, thank you so much. We'll wrap it up. Thank you so much for tuning in to the Mindie Molina Show. You can go online to mindiemolina.com. You can fill out our questionnaires and submit a request. You can book an appointment. You can do all of that right from our website, and you can email me. You can also go to YouTube, Facebook. You can watch the show live on Facebook as well. Thank you for tuning in to WCNO 89.9 FM. And remember that God loves you and there's nothing anyone can do about it. Good night.